How's it going, everybody? It is Dennis, and we're back with another video. And today, we are talking about Tesla. The Q1 financials are out. All the news is out. We're going to be talking about Q1 financials. We're going to be talking about TSLY and where TSLY is going, TSLL and the option strategy on that. We're going to be going over every single thing Tesla involved, anything that's Tesla based. So TSLY, TSLL, and Tesla, of course, in itself. So let's go ahead and get straight into it. Of course, as you can see on the screen, we were having a dip going straight down for Tesla, and it has spiked. It has spiked in one day. It has gone up by 12.10%, and probably a little bit more there. But it is up. It is up to $160.45 at the moment. It seems like for today, April 24th, the market is kind of balanced on Tesla, and it does not know where to go just yet. Well, let's go ahead and go over why it went up so high. So we got the Q1 2024 financial report. Of course, before we had the delivery report, and it was lackluster, and it was a little bit lower than expected, actually a lot lower than expected. But Q1 2024 financial report did actually bring us a lot of good info. So first of all, margin, which is the most important part when it comes to any of these reports, is margin. It is 17.4%. Last quarter was 17.6%. So even with the lower deliveries that we did have for this quarter, Q1 of 2024, we had 17.4% margins. Of course, this could be from Cybertruck sales, this could be from FSD adoption, and as well as power adoption. So putting more batteries into the power grid, more Tesla batteries, residential power being set up. So there's a lot of things to go over, right? So first of all, 17.4% margin. We actually, over here on top, we can see that we did have a growth of energy generation and storage revenue. It was increased 1,635. Of course, this is in millions. And of course, we had an increase in services and other revenues. We did have a lower amount of revenues from automotives. That is because we had less deliveries. So we can see that Tesla, even though it is seen as an automotive company, is slowly moving away from it, or at least diversifying its income potential, and is generating revenues and income from other things such as energy generation, services, and maybe automotive might have not done so well this quarter, but we still had good margins. So there's a lot to go over on this slide. Of course, if you want to go ahead and take a look at these Q1 financials, I'm not going to go too deep into it. Of course, we saw before that total deliveries were down 386,000 deliveries overall for Q1 2024, and compared to 435. So overall, we were down, especially compared to Q1 of 2023. We are down a significant amount. We did create almost similar to what we did in Q1 of 2023, roughly maybe 6K, 7K down compared to Q1 2023 for Q1 2024 of production of vehicles made. But overall, I would say these reports were not that bad. We got a lot of good information. Of course, the main thing is operating income was 1.2 billion. And then, of course, we did lose money. The cash supply did decrease by 2.2 billion, but they do have a good amount left over. As you can see, they have 26.9 billion still left over, and they are losing 2 billion every quarter. They still have a lot of cash to work with, and of course, they are making investments, I'm assuming, investing into other supply lines, investing into more sufficient lines as well for Model 3 Performance and Model 3, the new Model 3 Highland model. So, there's a lot of stuff going into it. And of course, it's good to see that they are spending money. I guess some people want more cash on hand, some people don't. If they're spending cash in the right places, that means they're making investments into their own business. And if cash is laying around, then that means they're not making many investments, or they're just generating a lot of income. So if you want to really go deep into the Q1 financials of Tesla, of course, it is on their website. But most importantly, what really skyrocketed the stock was, of course, first of all, the meeting. Elon did very well on the meeting, at least from my point of view. He spoke on what needed to be spoken on. He mentioned all the topics that needed to be mentioned, especially for the institutional financial companies on Wall Street. He mentioned the Model 2 and how it might be even delivered late 2024, early 2025. The robo-taxi or the robo-cab that they're going to be launching soon, FSD, and how they're going to be moving on to selling the FSD platform to other companies. They're actually in talks already with selling the FSD software to other companies. So that is very good. Of course, we can see all the production numbers we have here updated from the last video that we did. Last video talking about pre-Q1 financials. And we had the deliveries from last quarter, and this is for this quarter. But most importantly, which is I think a great thing to see from Tesla, and because the world is switching to EVs. EVs are reliable. EVs are cheaper to take care of course, for when you're owning an EV. They're also very cheap to charge at the moment. They're cheaper than having gas. So as we can see, you need batteries and you need charging stations, and that's what Tesla is providing. And we can see energy generation and storage. Non-automotive gross profit was increasing, which, like I said, they're shifting away from the automotive side a little bit, or diversifying at least at most. And you can see the non-automotive gross profit increased, and so did energy storage deployments, which also increased pretty similarly. So we can see the more not energy storage development we're getting, and the more charging stations and battery packs that we're putting out there in the infrastructure, so is our gross profits. Now, what really sparked the growth as well, I think personally what really pushed it as well, was what we got here. If we go ahead and scroll down, of course we have a basis of what their company is. You can see insurance, ride hail, which we'll get into right next, FSD supervised, all the vehicles that they have, the services, the battery cells, which at the moment the 4680 cells are being questioned to see if they're really that sufficient or that profitable for the company, and they're going to be moving on to it. We have AI computing, the Dojo computers. We have humanoid robot. We have the Tesla bot, solar, of course, all of that stuff, right? But where it really gets interesting, of course, we have the lease. We talked about this as well in the previous video, $299 a month now. Cybertruck, talked about that as well. Charging networks being updated, we talked about that as well. Like I said, this is all we mentioned in the previous video, and they just showed us that that's what they're working on. That's what they're thinking about. All the things we talked about in the previous video, which is going to be top right if you want to go over that. Everything I mentioned in that video was said in the Q1 financials report. Supercharging network, AI, Tesla bot, Tesla taxi, all of it was mentioned here. So, I'll say that I made a pretty good prediction, but what prediction I didn't make was the Tesla app that they released. This is, of course, a mock-up. I'm not sure if this is working yet. Nobody's really sure if it's working yet, but we have a mock-up of what the app will be looking like. And of course, we have the summon feature, like you can summon the vehicle. You have where the vehicle is coming from. You can even set the interior temperatures before it arrives, how much space it has, if it's a Model Y, Model X, or even the new Model 2 platform, depends on how much space in that. We can see, of course, where you're traveling live. You have music. You could change the music that you have, the time, like all the basic stuff you have on Uber, but more. Like you could, because since you have no driver, nobody to request your music choices or your temperature choices, you could do it all through the app from Tesla. So this is pretty interesting to see, and I say this is pretty bullish. If they're already looking at an app, that means they are pretty confident that the FSD will soon be coming. And they did mention it in the call itself that they are moving towards slowly having FSD in some areas, in some states, in some cities. If they are approved by government officials, they will be launching them soon, probably end of 2024, and is moving very quickly. Of course, we have the Dojo training cluster right here, and just overall the power grid. So that is the overall Q1 financials. Like I said, if you want to look at the Q1 financials, go on their website. But what does this mean for Tesla, TSLY, and TSLL? Of course, Tesla, like I said, mentioned before we get into TSLY and TSLL, which I mostly focus on in this channel, Tesla overall is trending upwards. It had the spike. At the moment, it's staying still. I don't think the market knows what to do just yet. I think they're still trying to figure out how to price, what to price the stock at. A lot of bears who had puts expiring on the date or this week had to buy back their puts, so that's what spiked up the price of Tesla. So we'll see what happens. We'll see what happens in the next week or this next month. See where the stock goes. I don't think it'll be dropping as much as it was previously. At least I don't hope so. I don't hope it drops, because if it keeps dropping, then of course it's bad for me, but also I don't see a reason for it to keep dropping. There is that hope there. There is the fact that Elon is continuing to grow the company, and he's going to continue working for the company. They have all these innovations coming, and they're confident that they will be coming this year, next year, or in 2026. So there is that growth, and the market, the institutions are factoring that in already. Bank of America already upped it back to $220 for the share price. What is that? Their estimate is. There's a lot of other institutions that are pricing it around the 300 and 200 level. So there is that institutional money that will probably be going into Tesla again. So we'll see where it goes. So it's very interesting. Well, let's go ahead and get into TSLY and TSLL, because of course I own TSLL. I don't own Tesla shares actually on their own. As you can see, I have no Tesla shares. There's no box here to show how many Tesla shares I hold. I hold TSLL and TSLY. On TSLL, I run my option wheel strategy. On TSLY, I have dividend paying ETF. So for TSLY, first of all, distribution so far for this month is 62.19% year to date. Of course, we'll see where that goes. It could go up, it could go down, depends on what the yield is from Tesla. I'm assuming it's going to stay at this range, and if it does, that means, and it stays at this price of 14.57 or 14.60, and that around that mark, that means we'll get roughly 70 cents per share around there, in the high 70s, maybe mid 70s per share. So that is very good. But overall, when we look, of course, year to date, it has been dropping with Tesla, which is apparent, right? It's the underlying stock. But it actually, well, it did drop a little bit more than Tesla. I was going to say it seems like it dropped a little bit less, but no, it dropped a little bit more than Tesla. For the year, of course, it's down a lot more because they did open up at a pretty bad time. And of course, TSLY is limited on the upper side because they do a covered call strategy, and therefore their contracts are limited to how much growth they can have. But they did grow a pretty good amount. As you can see, they did match Tesla pretty well, and they actually outpaced it 2% for the week compared to the 1.78% for Tesla. So they did outpace it by roughly 0.2%. So pretty good. What can I say for TSLY? Well, of course, if Tesla trends up, so will TSLY. Now, what is my plan for that? Well, of course, I will continue averaging in. My average is pretty high, as you can see, is 26.29. I am no longer adding any more of my own money. Of course, any income I earn outside of my portfolio is not going to be going into TSLY, as I am 11.46% diversified in my whole portfolio. There's 11.46% of my diversity is TSLY. So I am no longer investing any outside income into TSLY. It is going to other ETFs, other option strategies. I am actually taking, like I said before in my other videos, 50% of my income from TSLY, from the dividends, is going to other ETFs, other option strategies, and the other 50% is put back into TSLY to go ahead and lower that average cost. Do I think my average cost will get below 26.29 anytime soon? I don't think so. 26.29 is pretty high, and I did buy a lot of shares at that price, so it's going to take a while for the shares to come back down, or at least the average cost. But if the dividends do start increasing, and if the share price of TSLY does increase with Tesla, of course, my average cost will decrease, and also will get nearer to my average cost a lot quicker, and also it will decrease a lot quicker because if the NAV, if the value of the ETF goes up, and we're receiving dividends based off that NAV, so will the dividend payment will go up as well. So instead of, getting, like, if we look at the screen right here, instead of getting the 68 cents we got previously, this month we might get 75 cents. And if the NAV continues to grow with TSLY, then we'll get back to 80 cents. We'll get back to 90 cents, $1. And therefore, I'll receive more dividends. And since I'll receive more dividends, then there will be more of that 50% to go back in and lower that average cost and increase that dividend even more. So that is my outlook for TSLY. With Tesla going up, TSLY is looking pretty good. Of course, it continues to pay dividends. As you can see, it is going down at the same pace or similar to the pace of Tesla, but that is just counting in NAV. Of course, the dividends do help support that NAV erosion that we're experiencing due to Tesla dropping. So it's pretty good. Dividends every month, constant. They are getting lower, or they've been getting lower recently, but we'll see what happens with this next month if we are able to stay at this $14, maybe even $15 mark and continue to rise upwards. If Tesla continues to ride, I think dividends will increase. Well, they will increase, but I think they'll increase a significant amount. Therefore, we'll get more dividends, and the average cost will begin to lower as well. Now, with TSLL, like I said, I run the option wheel strategy on this. I've been running option wheel strategy on this actually since January, and it's hurt. It's hurt a lot. Actually, before we even go to that, we can see I'm down negative 44.59% on TSLY, and I'm down negative 49.32% on TSLL. It's hurt a lot. Tesla is down, and it hurts. It hurts a lot. But it's got to see that it's bounced back, and hopefully that trend continues. Hopefully we begin to grow again, get back to the $200 a share for Tesla, maybe even the $250 mark. But that's going to take a while, but hopefully it does. Of course, I'm holding off. I'm trading monthly options on TSLL. We could go ahead and down and take a look. I have a $9 call and a $13 call. I have a $9 call because I bought $100 at roughly $930, which was $9.30 per share. And then I also have a $13 call because, as you can see, my average cost is $12.94. So I'm staying above that average cost, and I'm doing a monthly trade. because weekly does not bring that much profits, and also I don't really want to manage it. It's not going to be moving around that much. There's not much for me to manage. I'm not going to go below my average cost because that is very risky, and I really don't recommend going under your average cost, because we made that mistake already with Riot stock. And when Riot went under its average cost, when I began to trade under the average cost of Riot, I lost a significant amount. I lost like 1.8K or maybe even 2K on Riot because I had to buy back the option so I don't lose out on both sides. So that's why staying above my average cost for the TSLL, not going below, continue to trade monthly. Even though the payments are not that high, I think I received like $50 off of this. Let's see how much it was. Yeah, $55 off this call. It's not a lot, but it's good enough to take those $55 and average down my position. Of course, I'm not buying any more TSLL. I like Tesla. Don't get me wrong. I know a lot of people are going to be like, this is contradicting. I like Tesla as a company. I believe in Tesla as a company long term. But for my portfolio, for my trading strategy, it is way too volatile for me. So probably once Tesla returns to its average cost for my TSLY position and my TSLL position, I'll probably sell out for TSLL. I probably will stop trading options on TSLL. It's a little bit too volatile. I'll be switching over to an ETF called TNA, which I've been playing recently as well, at the same time with TSLL, and it's performing way better. It's stable. It's good returns. So with TSLL, TSLY, I mean, I'll be keeping that. It pays dividends. It's high dividends. It's 50 to 60% returns, and I could keep that. I don't mind keeping that. But for TSLL, I don't want to have two ETFs and stocks that are both in Tesla. TSLL is a two times leverage stock or ETF for Tesla. And of course, this is 9.18% of my portfolio, and this is 11.48. So altogether, it's 20%. 20% of my portfolio is in Tesla, and that's a lot of risk I don't want to take. So that's why with TSLL, I'll continue to trade option strategies on it. I'll continue to sell calls. But once it hits that $13 average, if it hits that $13 call and I'm able to sell out of it, I'm selling out. I'll take that profit I made off the calls that I'm selling. I'll take that long-term hold and that, I guess, loss on time, because I was holding all my money in this. But I'll take that loss on time. I'll take those couple $50, $100, whatever I make throughout every month until it goes back up. It sucks a little bit. I get it. It sucks a little bit to see it down in the negative, but sell out of it once it goes back up. And when it does, go ahead and trade a different ETF, trade a different stock, and make money on that. But yeah, that's pretty much it. That's pretty much it with my portfolio, my take on Tesla, my take on TSLY and TSLL. I know a lot of people who watch me trade option wheel strategy as well, and a lot of people actually trade TSLL because it is such a cheap ETF to trade, and because it is volatile like Tesla, especially because it's 2 times leverage. It does bring good rewards for options trading, but it's very risky. It is very risky, as we can see. It's dropped significantly, and of course, because it's 2 times, it's dropped to 54.73% compared to 35.69% of Tesla. And it's just difficult to see, and you're not making that much income, so I don't think it's worth it personally for myself. I think go for a little less returns. Of course, TSLL, I'm pretty sure, will give you like 100%, 120% annual returns, but TNA only gives you like 50-60%. I'll take the 50-60% any day. If I don't have to, sit there and see the red and have a negative portfolio, and I get to trade every single week with TNA and take that $50, $100, whatever it pays me for TNA, and actually have growth as well, because TNA is a small cap ETF, leveraged small cap ETF. So it does grow with small caps, and it does follow S&P 500 and QQQ a little bit. So that's what I'll probably be doing. Tesla overall, I am bullish on. They had a great report. Margins did not drop as much as expected. They were expected to be around the 16% mark. They're at the 17.4. Q2 is going to be an interesting time. They're ramping their productions up for the Cybertruck. They're ramping up their production for the new Highland model of the Tesla Model 3. Tesla Model Y is coming. Tesla Model 2 is coming, whatever they decide to name that, if it is Model 2. And overall, Tesla is looking good for the long term, and that's what it is. Investing is long term. TSLY continues to pay dividends. I will continue to hold it. Sure, I have negative 44.47%, but that is without dividends accounted for. And if Tesla goes up, TSLY will go up. It'll go up a little bit slower because it is capped at every single week for whatever call they choose to have. But those dividends do bring significant income that I can invest into other ETFs and other option strategies and continue to hold up my account and allow me to grow in times of downturns such as this. So that is it. TSLL, I'll be selling out once Tesla goes back up. No point of trading options on this. It's too volatile, too aggressive. It's not my cup of tea. I'll stay to the side. I'll trade on TNA ETF. It's easy. It's 50% returns. It's 50% returns, still a lot of money, and a lot of people forget that. TNA, I think, is the way, but Tesla, doing good. Let's see what happens. We'll see what happens. But that was me. Thank you everybody so much for watching. It's a short video, just going over the Q1 financials. Just a short way to go over the Q1 financials. My plans for Tesla, my plans for my positions, TSLY, TSLL. And I'll see you guys in the next video where we're going to be going over my monthly income, which is either going to be high or low. I still have one contract to trade for this week on Riot. So if Riot goes up and I get a good contract price and I get good payout, then I think it might be a high payout or a higher payout than last month. But we'll have to see, of course. Still two more days left for trading days for this week, and for next week, 2 more days for April. So thank you so much everybody for watching. I'll see you guys in the next video on the monthly recap. And that was my take on Tesla.